That's what I'm here for.
Just make sure the camera's starting.
All right, good morning. It's 9 a.m., so we'll go ahead and get started here for our first ever Policies and Pastries, brought to you by the Williston Area Chamber of Commerce Policy Committee. And we have chosen the most riveting topic for our first one, recent changes to business tax policy. So we appreciate you being here today. First, I just want to say thank you to Williston State College for letting us use the space, as well as Montreal Williams Electric Cooperative has donated the water, and Horizon Resources is our sponsor today for the coffee and pastries this morning. My name is Lindsay Harriman. I'm a Community Engagement Coordinator for Williams County and the Chair of the Policy Committee. We also have a couple committee members here today supporting us. Paul Linkert from the Williston Basin School District, and Ann Quandy from the City of Williston, Sandra Feeder from Senator Kramer's office, and Brittany Mayo here from the college. We also have our chamber staff, Meg and Carmen and Raquel, who help keep the wheels on the bus and keep this going. I think I exceeded my email limit to Raquel this week, so I'm just glad she's here. In the back, we do have some information on the topics that will be discussed today. There's a couple different articles. There's a resource packet from the U.S. Chamber about the federal tax policy changes. There's also some information about the Civics Bee. The Civics Bee is an event that the Policy Committee launched last year. It's the national essay competition for 6th, 7th, and 8th graders to help bring awareness to civics. We may need to bring awareness to adults in civics too, but we'll get there later. So please feel free to take those. And in general, all the information that is presented today is just that. It's information. None of the information or comments that are made today should be taken as legal or tax advice. All right, so before we get started with our panelists, we do have some fun tax trivia. And up for grabs, we have 2 North Dakota logo stickers. If you think it looks like a shoe, you don't get one. All right, our first trivia question. In some U.S. states, sales tax rules can get pretty quirky. Which of the following is an actual sales tax distinction that has affected businesses? A, New York once taxed bagels differently depending on whether or not they were sliced. B, Montana taxed cowboy hats more heavily than baseball hats. Or C, Oregon taxed every pickle by the ounce, but not cucumbers. A, New York and bagels. B, Montana cowboy hats versus baseball hats. Or C, Oregon pickles versus cucumbers.
A.
A. There we go.
Is it?
Yeah. New York once taxed, in New York, an unsliced bagel was a tax-free grocery, but once you sliced it, it became prepared food.
Wow. That is true in North Dakota. If you warm up the pastry, it is taxed differently than if you hand it out cold.
Same with Subway. If you get a toasted sandwich at Subway, it would
A
be the
toasted sandwich at Subway costs more
It's
than a
taxed.
cold sandwich.
Yep.
Wait, this is going to be the next part. All right, one more trivia question. North Dakota did not always have a state income tax. In what year did the state first adopt one? 1890, to help fund the capital right after statehood. 1919, during the Nonpartisan League's push for state-run industries. Or C, 1933, as part of Depression-era fiscal reforms. 1890, OG. 1919 during the push for state-run industries, or 1933 because of the Depression? Hmm? A or B? North Dakota steroids, Dave.
B.
B.
There you go.
North Dakota first adopted a state income tax in 1919, championed by the Nonpartisan League to support the Bank of North Dakota and the state loan elevator.
Thank you.
There you go. Thank you.
It's
All
not a
right.
shit.
All right. So we have 3 panelists here today. They're each going to talk a little bit about a different area of recent tax policy changes or things that exist in our community, and I'll let them go ahead and introduce themselves.
That was perfect.
All right,
Nope.
Yes.
Yep. There you go.
I'm Jerad Suess, CPA here in town. I'm an owner of Lee Suess LLC. We provide tax preparation services and business consulting.
My name is Richard Thompson. I'm with the City of Williston's Economic Development Department. Only in the role for about 2.5 months now, almost 3. So relatively new, just relocated from New Jersey.
Welcome.
Thank you.
How do you tax your rentals?
Yeah, I'm Keith Olson. I'm the director for the Small Business Development Center of Williston State College employee.
All right. So we'll hand it over to Jerad to kick us off.
Good deal. Well, whenever I'm playing games with my kids, they always tell me first is the worst because I usually beat them. And so today I'll go first, and it might be the worst because it's tax policy. Not the most riveting topic. Everyone hear me all right? Good. Just to get a poll, I know some of you guys in the audience, I don't know all of you. How many of you are small business owners? Okay, so good majority. How many of you guys like the government? So, totally understandable. Tax policy, the changes that happen, it's hard to distinguish business from individual because most businesses nowadays are set up that all of the income ends up being taxed at the individual level. So some of the stuff I talk about today is very much business related, but there's also an aspect that it's going to be on the personal side too, because it is very hard to distinguish both of those. The recent tax law changes that happened, I would say are very misleading. The media really plays it up. I don't care what side of the political spectrum you're on. The media plays it up and they fit their narratives. So some of the things that we'll quick go over today, it sounds like one thing, but it ends up being another thing. And the reason that I don't have slides or I have one handout I printed right from the IRS's website is because this is evolving every day. There's new guidance that's coming out, how they're going to interpret the things. What people don't realize is once a tax bill is passed, then before someone like myself can really get into it, it's got to go to the software people, the tax preparation software people. They have to figure out what's going so they can put it in their system so the software will work out. The people that we rely on to educate us, our continuing education, they have to learn it so they can help teach the aspects of it because, when you pass a 1,000-page bill, there's people that voted on it that don't even know what's in it. And a lot of times they say you have to pass a bill to find out what's in it. So there's a lot that keeps coming out. Once again, you can't believe everything that you read. Some of the big ones that I'm going to key on, start kind of on the individual side. The one big one that came out, there's probably 2 big ones, the no tax on tips. That was something that was played up quite big in the media. That's not really what, no tax on tips, that's not really what it means. I would say a lot of tips probably nowadays aren't taxed because people get them in cash. They don't report them to their employer. They just put them in their pocket. So I would say a lot of tips nowadays in the different industries go untaxed. So you have that aspect of it, that there already is a big portion of it that's not being taxed. There's still payroll tax related to those tips, so it's income tax we're talking about. So when they say no tax on tips, there's still an aspect of tax that's on there. And then they start throwing in thresholds. If you make over a certain amount of money, well, now they are taxable. So while they can pitch a narrative of no tax on tips, who it ends up being applied to ends up being a smaller portion. So that gets frustrating when people get something in their minds that it's going to be one way or another, and then it's not until they file their tax returns where they actually see the impact. Another one was no tax on overtime. That's a big one. We got a lot of people call in and say, well, how can I pay my people, overtime wages to get out of this? And, well, the no tax on overtime, it's not what it sounds like. You still pay, like, for instance, if you make $20 an hour, your overtime pay for the most part is $30. It's time and a half. When they say no tax on overtime, they're talking about that $10. They're not talking about the whole $30 that you get paid. So you're still paying tax on that, on the $20, and there's still payroll tax. So it's income tax we're talking about. So there's still an aspect of tax that's going on here, but the media likes to play it up that we're getting no tax. Well, that's not quite what it ends up being. Another big one, no tax on Social Security, or on Social Security. That's a big one that was a main driver for a lot of things. Well, once again, that's not quite the case. There's different ways to tax Social Security depending on your income limits, and that was another big one that was there. There's an aspect that'll help relieve some of the tax, but it's not what they said. So there's going to be some people that end up being upset that they thought it was going to be completely tax-free, and that's not the case. So you got to remember, with everything there's a limitation. With every limitation there's an exception. There's an exception to every limitation. It gets to be a little bit ridiculous. That's why my hair is growing gray and I'm losing it. A lot of people ask me, isn't this great job security? It's like, well, yeah, to some degree, but I mean, I want to have a life too, and if it wasn't for the tax software people that really put this into play, no one could afford to get a tax return done if we had to do it by pencil and paper. I mean, our tax law, our tax code is so complex, and they're not making it easier, and it's really unfortunate to a lot of people that they have to rely on professionals and can't understand a lot of things. I mean, I don't know how every single thing now at the bottom says, consult your tax professional. It's to that point where just a layman can't just read something and go, okay, that makes sense. So that stuff is very frustrating. I mean, I'm not the biggest fan of the government, but we can do this in such a better way. But once again, passing a bill that you haven't even read, that seems ridiculous to me. If that's your job, is to be in the tune on that stuff. So some of the other big deductions more on the business side. The QBID deduction, for anyone that doesn't know, basically in very simple terms, there's a 20% deduction out there that ultimately is taken on the individual return, but it's related to your business, and you get a 20% deduction. So if your business made $100,000, when that trickles down to your individual return, you'll only pay tax on 80,000 of that. So that was a big thing that was going to sunset here, that in the One Big Beautiful Bill Act was made permanent. So that ends up
Does that have a phase out?
Absolutely. And there's exceptions.
What's the phase out on that?
So the phase out,
Or the maximum?
They upped it. It's complicated because once you get to the phase out ranges, then it stops looking necessarily at your net income. It looks at your net income to see what your Cubic deduction would be, but then it also looks at your wages and your assets and takes a percentage of that, and you may be limited. So it's one of those things that, you know, when you start getting into the what I would call it the $400,000 or $500,000 range of income, of qualifying Cubic income is when that stuff starts phasing down, but you can still get the full deduction if you have those other things.
And that's that 400-ish is for a joint filing?
Yeah.
Okay.
Yeah, but I mean, once again, you
Yeah.
know, depending upon your situation, there's phase outs, but yeah, I mean, if you have the right business, the right amount of assets and payroll, you can get the 20% on a lot of money, way more than the 400,000, just because you reach that. But then it also starts looking at there are certain services that basically the accountants of the world, the lawyers, doctors, architects, they get singled out and they get phased out a lot sooner than other businesses. You'd think it'd be the reverse, that accountants would have the best situation possible, but somehow our representatives don't put us in there, and we kind of get the shaft on a bunch of things. So there's a whole group there. So once again, depending upon what your business industry is, you may get phased out sooner than others. Another big one that went through is bonus depreciation. So that's probably one of the biggest takeaways that we saw in planning is the bonus depreciation. So what that is, you buy a new asset, you get to write it off. That's the default. You write off any new asset, you have to elect not to write it off. That was something that has kind of bounced around at different percentages over the years. When it was scheduled to slowly go down to zero, COVID hit, they extended the 100% bonus depreciation, so you write it all off during the COVID years, and it has been trickling down to 80%, 60%, 40% is what this year was supposed to be. The One Big Beautiful Bill Act increased that to 100%. So that's great news for a lot of people. A lot of people have multiple businesses, whether it's a farm, more than one business, and they need to create a big loss in one to offset the income in another. So that allows them to do that. So that's probably one of the biggest things that didn't make the headline news that will impact, I would say, a majority of the people around here. That's probably, I don't know, no one's sleeping yet, so that's kind of a good thing. I don't know, that's some of the biggest things. So I'll be available for questions too.
I think in general, is it ever too early for someone to start talking to their tax advisor?
No, I mean, in these big years, to repeat the question, if not everyone heard it, is it ever too early to start planning? No. I mean, December sometimes is too late, November sometimes too late, especially when you need to buy a piece of equipment. Well, a lot of times you have to have that piece of equipment in possession and ready to be placed in service to actually deduct it. So just because you order something, a new combine, and it's not going to be here until March or April, that doesn't qualify. So it's never too early to start planning, to look at things, especially in these years where things are constantly changing. It's always good to just be in touch with any of your professional and in any of your financial realm. Be in touch with those people throughout the year. It's definitely worth it.
All right. And just as a reminder too, the document that Jerad was referencing, there are copies in the back, as well as some additional information if you want to take it back to your accountant or your tax advisor, or stay up late at night reading it. If that's what you're doing. All right, so next we're going to go to Richard, talk a little bit about Renaissance zones, and then we'll go to Keith, and we'll come back for questions as well.
Thank you. So the Renaissance Zone is a specially designated area within the city that encourages people to invest, redevelop, and revitalize the community. It focuses primarily on the downtown region. However, there is 2 additional blocks on on the northern side of the city. The downtown region, it's about 31 blocks. There's a online map that the planning department puts out. I know it's very small, but this pamphlet is available online as well. That goes into the different blocks, the streets, that you can see exactly where the Renaissance Zone is. So what the Renaissance Zone exactly is it is a program that has financial benefits in two areas. So the property tax exemptions, which typically last around 5 years. And in order to qualify, the project has to either be new construction or rehab. It has to meet a minimum percentage of the property's assessed value, and the percentage required varies by the city. Typically it's around 50%. The benefit there is the city can grant a partial or complete exemption from property taxes on the value added by the zone. So that's a major tool that investors are able to utilize. And then on the state level, through the state income tax benefits, you can receive a 100% exemption from North Dakota state income tax on income generated by business or investment property within the Renaissance Zone. And again, that's another 5-year term typically. There is a limit on that. That's around $500,000 per taxable year. But this can vary depending on the zone. Typical for Williston, it's around that $500,000 mark. And that's available for businesses, investment properties, so like apartment complexes within the zone, or even tenants who lease a space in the building. The Renaissance Zone isn't only for massive developments. It can be for rehab of major improvements to existing homes and commercial buildings. I think that's one of the big things with Renaissance Zones that's a misconception, is that it can be single family homes as well. New construction of residential units or business spaces is one of the main things that the Renaissance Zone has been used for in the past. And the purchase of a property that includes a major planned improvement is another thing that kind of falls under what is eligible through the zone. By offering the incentives, the program acts as a catalyst to make projects and overall investments within Renaissance Zone something that becomes more of a reality. So it kind of helps speed up the process of someone coming in, investing into a community and trying to revitalize a downtown region. And it's a way to ensure that the historical neighborhoods thrive at a level that is responsible. The Renaissance Zone in Williston is a total of 31 blocks in the downtown region, and then we have 2 non-contiguous blocks west of Highway 2 and south of 42nd Street, so that Walmart block up there with Doc Holidays, that's part of the northern region. In order to locate a property within the Renaissance Zone, as I mentioned, the planning department has a really great detailed map on our city website where you can go and you can kind of see exactly what blocks are qualified in there. Otherwise, most of the commercial real estate agents should know as well if you're trying to locate a property. But if you're looking to invest in Williston, I definitely recommend looking at the Renaissance Zones specifically, because it's a great opportunity to get some great tax incentives on it.
Thanks, Richard. And just, a little bit of foundation too on a Renaissance Zone. Not every city has them. They do have to be approved. It takes quite a different couple levels of approval and buy-in and letters of support from other political subdivisions to make those happen. And it wasn't always around that you could have 2 separate places for those Renaissance Zones. So they did start allowing what the state legislature refers to as islands. There are no palm trees, but they are islands where they can exist in 2 different places. And it's not something we necessarily talk about a lot, but it does have those benefits. And again, can you recap, what would be the first step if someone wants to find out where one of those locations are, if they're looking to expand their brick and mortar business or rehab something?
So if you're looking to either expand or even you're just curious, the first step is going to be the planning department with the city. So if you just look up City of Williston Renaissance Zone, it should be the first 2 links. One is going to be the map, and then the other one is going to be pretty much all the information on the process that you need to go through in order to start that. The first step is the planning department.
And Richard, do you have any examples of types of projects that have successfully gone through this process or are in in the Renaissance Zone currently?
Yep, so, the American State Bank, drive-through is one, Basil, the sushi restaurant downtown. The Renaissance is another big one that was utilizing the Renaissance Zone. So those are some of the larger ones, and then like I said, single-family homes can count as well. So there's examples of that we don't have, available right now.
So if the Renaissance is in a Renaissance Zone, is that like Renaissance Inception? two Renaissances maybe, right? All right, well thank you, Richard. Any questions for Richard at this point? Yeah.
What guidelines are used and who determines what is in the Renaissance or qualifies?
So it starts at our planning department. Typically, if you're interested in finding out more about it, that's the first step, is meeting with someone, so either Lisa or Ken up in our planning department. They'll be able to go through, there's a set guidelines from the state. Let's say if the project that you end up discussing with them is acceptable, then it goes to a state board where they review it. If that gets approved, then it's a whole process of going back and forth. So essentially, planning department to the state board, it comes back down to city commission, and then once the project gets approved, then it has to go back up to the state board to get finalized.
And as far as I'm aware, the boundaries of the Renaissance Zone are set, right? Like those are, when they apply to become a Renaissance Zone or have one in the city, the boundaries of those blocks are part of that application and are physically set. I think that's why on your planning map it will highlight exactly where that location is. Does that answer your question?
Yes and no, I was just wondering how north of town would qualify.
Oh, I think that's the reference back to the map part.
Yeah.
And maybe afterwards you can visit with Richard, he's got the brochure up here too.
It's two very small blocks, just, it's south of 42nd Street, and then just, northeast of the square. So it's that like Walmart block, and then, there's a secondary block, I think, where the Grand Williston is.
Yes, John?
This may be a question for Ann Quanti, but when was that designation installed, and how special is that? How hard was it to get it in place?
Our planning department is the one who worked on that. The initial, do you mean the initial or the addition?
The initial.
The initial was actually, I don't think I'm on, but the initial was started, prior to me even starting in the office. So, I mean, it's been in place over 20 years. So that designation has been there for a number of years that way. And I believe they're only allowed so many blocks in a Renaissance Zone. So it's not like they can continue to keep adding. And I'm not sure what the parameters behind it are. Our planning and zoning department, though, is open to answering any questions as it relates to the Renaissance Zone. We just offer it off as an addition to the other incentives that we have within the city.
And so some things might be included in the Williston downtowners as well as the Renaissance Zone?
So
They
it
would be
might
two separate?
qualify for Star Fund programs as well as Renaissance Zone. So they're two separate programs. So you might qualify for different elements within. So a business could qualify for multiple incentives.
So the age
Or
of a
be-
business, I'm sorry, go ahead.
Or be taxed, well, having to pay the fees to be part of the Williston downtowners as well.
Well, so neither one of these programs have anything to do with being part of the downtowners.
Oh, that's what, I guess that's what I was saying.
Yeah,
They're two-
so no,
yeah.
you don't have to be a member of the Downtowners Association to qualify for Renaissance Zone.
But some of them do cross lines.
No, the Star Fund incentives are also a city program.
Okay,
The Downtowners is a 501c6, they're a nonprofit.
okay.
So you do not have to be a member of their association to qualify for either one of those, Star Fund or Renaissance Zone.
The first step with the Renaissance Zone is just making sure that you're located within the zone. From there, I definitely recommend reaching out to our planning department to find out if the project is applicable or not. That's probably the first step. And then the brochure is going to get passed around so you can see like the map outlines. But like I said, if you Google Williston Renaissance Zone map, it's very accessible.
And just I know the microphones are a little off, just to question was about the Williston Downtowners Association and any relation to Star Fund incentives. And the Williston Downtowners Association is a separate organization, membership-based, that businesses downtown can join. And they have events and activities and whatnot, and that is separate from your business status and what you may do to qualify for certain incentives that the City of Williston Economic Development offers. And then two, a Renaissance zone is a designation of physical locations within the city that are delineated based on location and carry their own then set of incentives. So we are passing the brochure around, and then Richard will be here available too if you need the website or want to take a picture of it as well. All right, so we'll go ahead and go on to Keith. And he's going to touch a little bit on SBDC support options and tax information.
Thanks, Lindsay. It's not very often I get to be on a panel and I have the least serious stuff on here. I get to do the fun one today. The Renaissance Zone goes back a long time, and when it came out, it was strictly towards downtown. So if you look at every Renaissance map in every city that got approved across the state, it's all core downtown. And then about 2 sessions ago, they passed an addition to the law that allowed a city to come out with like an island or a 1 or 2 block area, anywhere basically inside city limits that they could designate as part of the Renaissance Zone. I think it came out like 20 blocks, and then they allowed it to get expanded to 26 blocks, but they had to be contiguous. And then the island thing is something that came a couple sessions ago. So it's not any. They were geared towards downtown redevelopment. So it's easy to get confused with everything else. But that's kind of how the nexus of it was. Like when it very, very first came out, probably the biggest Renaissance Zone project that was done was when they rebuilt the Main Street in Watford City, when First International put their corporate headquarters down on Main Street. That was probably the first approved Renaissance Zone project in the state. And that's kind of what, and then all of a sudden other cities got on board, and we've had multiple Renaissance Zone projects through the city of Williston, so it is a really big program. Most of the time when it comes to tax with the SBDC office, the first disclaimer we have to give is I'm not an accountant and I'm not an attorney, so I can't give you legal or tax advice. So our fallback has to be, what if 100 clients came in, this is probably what the result would be. We always encourage people, when it comes to tax, you've got to have somebody on your team that's an accountant or somebody that has tax knowledge, because everybody that comes in is typically starting a business, has always been a W-2 wage earner, and probably half of our clients have never even met an accountant. So it's very difficult to get them to make that conversion to you have to have tax advice, especially when you start dealing with sales tax. Anybody that's doing anything that has retail sales or rental sales or anything like that that's taxed is getting them to understand that you have to include that into your business model. And if there's sales tax that has to be charged and you don't account for it, pretty soon they're 1, 8, or 9% of your margin because you forgot to account for sales tax in there. So that gets to be a big deal, and I could give you 50 examples of how different accountants look at sales tax either in the P&L or in the tax return, and you have to be aware of it. Otherwise, they're one a bunch of your sales. We also, the SBDC has a great relationship with the tax department, so if there's a question, we can always get to the right person and find out almost immediately what the question is, especially if you're dealing with how something is taxed, whether it's inside the city, outside the city, what they call nexus, where the actual transaction takes place, has a big bearing on what it's taxed at. Is it city, is it county, is it a 1 or 2%, all that stuff apply. We can get those answers very quickly. They're really good to us. The other thing that comes up almost all the time when somebody wants to start a retail business is, when do I get my sales and use number? Well, most of the time you've got to have your sales and use tax number in order to get wholesale pricing. The problem is you really don't want to get your sales and use number until you're about ready to go into business, because if you forget to make your quarterly report, the fine is much, much greater than what your sales and use tax collection probably is, and they will not forgive that. You can't say, well, I didn't know I had to file it or any of that stuff, because they'll just fine you. Your sales and use tax is $5 and you forget it's $250. And they're not going to waive it. So we really try to be very cognizant of the timing when you have to have it if you're going to go into business. And it, like I'm sure Jerad would say, we could have somebody legal in 2 weeks between your LLC, your tax ID, and your sales and use number. So it's nothing that you have to sweat about. It's very quick, it's very easy, it's very simple to do. And the last thing, everybody works starting a business the first however many years to avoid as much tax as possible, but when it comes time to sell it, sales businesses are based on tax returns, and if you have a business that never shows a profit, it's not sellable. There's just no two ways about it. So you have to have, it's a long-term process to plan if you're gonna get into business and you're gonna get out of business. Because if you don't show tax, you've already been paid for it, and you can't get paid twice for it. At least that's what we always tell them, but you gotta have 3 years of clean tax returns if you have any hope of selling it, because that's immediately what they're gonna come back to. When you get into the whole, is this a stock or an asset sale, and how does the owner avoid tax? This is a huge process, so the day you get into business, you gotta be thinking about your exit and how you plan for it. If you don't have those things into account, you're not gonna pay, and then you're gonna pay. One way or another, just come up with a good plan, have a good tax professional. They're not the IRS, they're there to help you get through these processes. And if you ever do get audited and you don't have a CPA, it's not gonna be a fun situation. So, that's the first thing we always advise, you have an accountant, and if not, you gotta get one, period.
All right, any questions for any of our panelists? Does everyone know what the SBC is? Right answer only. I guess I could have done a third trivia session, but we didn't. All right, any other last comments, anything from our panelists? Questions? All right. Well, thank you very much for your time this morning. No one fell asleep on it. There we go. Success. And again, there is a lot of information in the back. Feel free to catch them afterwards as well. And if you know a 6th, 7th, or 8th grader and you also enjoy civics, please encourage them to enter the Civics BSA contest. The applications are open. And one last thank you to Williston